What's up, buddy?
Hey man, that's my line. How are you?
I'm hanging in there, hanging in there.
Yeah, yesterday was a little rough, huh?
It was rough yesterday. Let's just take the whole day. The whole day.
Oh boy.
Wake up in the morning and we, introduced to snow.
Yeah.
And so I'm shoveling snow, and obviously I work out on Sunday mornings with a group of guys, so I was shoveling profusely, and then I got to get there. I get there late, and then the wife wants to see a house. She wants to look at a house yesterday.
Oh boy. How are you gonna handle this one? You got a whole pool of realtors that you use, and now you've just made it public that you potentially are looking to buy a house, right? So everyone's gonna be calling you up. So are you gonna just pull a name out of a hat from all the friends, or are you just gonna turn around and do it yourself since you kind of know what to do?
Know what you got to do? You got to give it to her, and it has nothing to do with me. I'm off. It's all her. Whatever she wants to do, I'm just rolling with it. What, happy wife, happy life. There you go. So
That's what they say. Because I know you. We already had this conversation, and to the wife, I'm only joking. He doesn't want to move because he's got to give up that low interest rate.
it's
What are
it's
we going
just
to do about that?
yeah. It's just one of those things, Vince. The thing is, it's just the timeline is always never perfect, right? It's just never, how you draw it up, and that's kind of the thing where I said, yeah, eventually we should be looking to make this move, but yeah, she just pushed it a little bit sooner than I expected. So we're looking at a house yesterday, and then from there, it messed up my whole like timeline because I was like, I got the Bears at 3:15, and I gotta still do my YouTube monologue. I haven't done that yet, and it's like, so fast forward to the game. Obviously, I'm at the office and I'm typing up a monologue, and so now I finish up typing up what I want to say, and then I gotta record it. So I'm doing all that, and then at in between each like segments of what I'm
You're checking
saying,
the score.
I'm checking the scores.
Yeah.
I'm trying to wield my power into the phone of like positive, like what is going on?
You know that sign there? It says Epic Mortgage. Maybe you need a TV like right in that place. And then you won't have to leave the office. The wife will be like, "Oh, I know where he's at." Right? We'll just watch football there. You'll get two things done: quiet, peace, and
Man,
football.
6 years ago, that was the game plan to have this giant TV. You know how they used to have in offices, right? You have the giant TV, and we'll put CNBNC on, so we look like oh yeah,
Like we
this is
know
the
what we're
stock
doing,
market.
right? Listen
Yeah,
to CNBC all day long.
yeah, yeah.
Right.
Here's the ticker tape. See, this is the great time to lock in. But yeah, so mind you, I did not see the first half, which thank God I didn't. I
Well, I
came in
mean,
and
at the end of the day, right? I mean, they were down. The biggest part of the first half, he gave up a touchdown in the last 3 minutes of the half. Like
right,
that's got to stop. That can't happen anymore. Right?
correct.
It's nice to see that they made adjustments in the second half.
Yes, they did.
Okay, I don't know where DJ Moore is.
Man. Was
You
he
know,
iced out? Did he even catch a ball? I didn't see the stats.
he
Did he even
he, he
catch a
had
ball?
three targets and -4 yards.
Wow.
I think he had one completion. Um, the last 20 seconds there of the game, you could see that DJ Moore was maybe potentially open,
Potentially.
but you also can't tell where Williams was at the time. You could say he was open. Was he running it backwards? And you could just see that they don't have chemistry.
No.
And to have your number one receiver, and I'm a big fan of Odunze, he's our number one receiver. We're not going to say that yet, but next year he's going to be. Do you move more? And do you truly trade him?
I think more. I mean, Luther Burden looks good to me.
And
It looks
that's the
like he
point,
has
right?
more
Luther
trust in.
Burden looks good, right? And so the new number one and number two are going to be Odunze and Burden. And it's more just
Pass
going to be
catcher is Loveland too. Loveland is a stud.
correct, right? So the running backs are set, right? And that quarterback connection between Williams and DJ is just not there. And you see it.
Yeah. My thing, the hard part when you watch football, obviously, is just with the helmets on. So, especially when we're all focused on the quarterback because they're the one with the ball, where are his eyes? What does he see? What is he looking at? Because obviously, when the final play, 4th and 1, you just need 1 yard to get the first down. You'll call another timeout, and then you'll have 4 plays to try to score a touchdown. Initially, Kmet is open. The same play that they ran in Philadelphia, he breaks open.
Correct.
Now, did he turn? Did he not turn yet? I don't know if he knew the ball would be coming, but he was open when he broke. And in stride, he's wide open.
He was.
So, Caleb, like always, holds it a little bit too long. Going to now you got 2 defenders coming at you hard. So now there was no way he could run to get that 1 yard. I mean, he would have had a dive and something amazing. He was too close to Swift, who's on the flat, so he's not going to get it there. So my only question to Caleb is, do you know where all your outlets are supposed to be? Like because if you're looking, Moore is right there. A nice little dink over. He's going to catch it. Even if they tackle him, he's at the 5. So I just need to know where his eyes are. And did he know where everyone's supposed to be?
Right, because we still had a timeout at that point in time too.
Yeah, I think we had 2 timeouts maybe. 27 seconds left, 2 timeouts, 1 yard to go, 4th and 1. It felt like it was going to be one of those things. Towards the end, as I got there and I see that they're playing much better, obviously they start off behind. I had a feeling they were going to lose the game, right? But I thought they were going to lose off the 2-point conversion because I thought, they're going to go for 2.
They're going to go for 2. They didn't, right?
And I think we would all feel better today if you convert the touchdown, you go for 2 and you lost, and then you say, okay, we're right there with them. And we had a bad first half.
Actually, think about it. Would you have won for 2, or would you have just turned around and said, "We'll take the tie," because the tie would have actually been a win?
Well, it's overtime.
Well, yeah, that's true. It would have been overtime regardless.
Overtime, it's cold outside. Right. You don't have all your players.
We weren't there yet. So would you rather played for overtime than to go for 2 because they already tied with one team? So in the event that you would end in a tie, it would actually have been a win.
And that would have been the talk of the town, and that's in my mind as I was fast forwarding the game. That's where I thought we were at. I thought we were headed into, okay, he's going to go for 2. And the discussion is, should he have gone for 2? Do we go to overtime? It just looked like from afar, Kyle Gordon didn't play. That hurt, right? CJ Johnson was way too slow, to guard some of these wide receivers. Yep. And, what we thought was our greatest strength on defense was our DBs and our safeties.
We got exposed a little bit defensively. Okay, well, I mean, let's just say, right, it ain't all bells and whistles right now. The jingle bells aren't jingling anymore, right? I mean, the defense showed a little weakness, is what it is. But all right, well, we're done with our first 10 minutes of the show. So we're done talking about sports. I know I teased a little bit that the Bulls were doing really well, and I kind of turned over the page and they kind of fell apart a little bit. Man. So maybe we'll talk about that later on in the week. And I really want to stay on your outline this week. I know I hit you with a couple. Yeah, just because we got a lot of topics to talk about.
Sure.
And then the other thing too, I listened to you guys on Wednesday while I was talking. I was posting a little couple things. When you and Jess get back on the call, this will be a little tease. On Wednesday, get back into the buy downs because there's one little piece of information we missed to kind of giving out, and I think you guys both know the refunding portion of it.
Sure.
And I want you guys to maybe touch back on it, right?
Okay.
And if the audience is listening, just kind of circle back on that. That's why I wanted to bring her on today, but I didn't work on the scheduling. Yeah,
no, I mean, obviously we were having some good conversations. I felt like with the buy down options that are available to people. And I just, I think, heading into 26, I mean, that's kind of the talk, right? I mean, we're the last month of the year. We're T-minus 2 weeks away from the Christmas. So it's one of those things of like, okay, there is a level of finishing strong, finishing out the year the way you wanted to. And, I feel like I'm still trying to, wrap up some things and have some more clarity on just where we're going to finish up. But then the reality is, all right, you turn around, new year.
Right.
And I think everyone is curious on what to expect in 26. What is 26 going to bring to us as far as real estate and mortgage trends? And obviously we're going to continue to see rates slowly drift the way we need them to drift.
Right.
It's just not going to be a straight line.
The quick one on the rates, and we've said this over and over, we're on opposite ends here for this week. I think we're getting a cut. You said you're not. I don't know if we're still.
I'm waving the white flag. You're right.
Okay. So we're on opposite ends of that one. With that being said, that cut is not going to change the consumer sentiment of buying a house. It's still a slower process, and the timing of the year also creates that slowness. It's unfortunate. It's part of our business. It's how it works. Because the minute the 10th happens, it's going to be, well, what are we doing in January?
Right.
And that's where the tone's going to go. We said this before, continue to say this. The 10-year has not held under 4%. Today, I think we're sitting in the middle teens, 4.15, 4.14, right? We were closer to 4. That's got to get under 4. Otherwise, we're not going to see what they anticipate us seeing. Sure. And at the end of the day, we got a deal recently, and don't want to get into the specifics, but we got a high credit score, 680, and she's at 6.5. And that 6.5 is almost a 2 points in lender credit to help her pay for other costs. So realistically, the average 30-year fixed rate mortgage is 6.25.
APR 6.394.
Give or take here, right?
Sure.
In this particular client, I'm at 6.5, but she's only putting 5% down. So I'm using a higher rate because the anticipation is rate's going to be lower in 6 months. So let's take the credit to reduce your cost today. We'll talk about refi 6 months or 9 months down the line. So we're doing that setup, which is some of the stuff that you guys are starting to talk about as strategy points of what do we do and how do we take advantage of this, with the intention that rates are coming down next year.
Yeah, I think overall we've seen we saw the rates obviously in the pandemic so low, right? So that was one spectrum to the other spectrum where rates were, so high. And then there was a level of just the mood, I guess, in the room as far as buyers and sellers was that we're going to see this extreme movement again. And now the market has spoken and said, no, we're done with the extremes right now. Now we're just going to drift. Sometimes we're going to drift a little low, and then sometimes we're going to drift a little high. We're going to stay very technical based. And technical just means, what news and notes are coming out that's going to kind of drift the rates either one way or the other. And I think that's where that's where it is. But we have to all get used to and comfortable. I have conversations and, with people, right? And so they'll say, that's high. That interest rate's high. And it's like, what perspective are we talking about high right now? Like, because, we're still in historically low interest rate market right now, an environment that has, given us 1975 to 2025, a 50-year look, average rate is 8%.
Right.
So at the end of the day, we're historically low.
We're still low, right? I mean,
we're still low.
Right. And it, I could look back a couple of my recent deals. Life events is what's causing my activity. It wasn't the sentiment of I'm excited to go buy a house, right? My last 2 closings have all been off of a divorce, right? And that's it, right? And we've said this before. It's a cycle. You're in a home for 7 or 8 years. Well, if you look at the calendar, we're 4 years out from the low historical rate. So that turn is coming. But that sentiment of the excitement, the seller's not excited about giving up that lower interest rate, but they're doing it, right? And as far as the person buying a house,
And
as far as the person buying the house, these buy downs, seller concessions, these strategies are to be used today with the intention of refining, even if it's 18 months from now or 12 months from now, knowing that the trend is going to be lower.
Yeah. And even, I don't like talking about myself per se, but just even in my situation of saying, hey, recognize it. Hey, I want to buy it again. it was a great example on Sunday, yesterday, just a great example of the concept that just because, you can't map it out. When life happens, when opportunities come, yeah, in a perfect world, it's, 2 years away and it's going to be this amount of money and blah, blah, blah. And it doesn't work like that. Real estate, it's just so, you know, it's kind of impromptu. Life be lifing
I
and
was
things
just going to
happen.
say your famous quote of life being lifing, right? It
Yeah.
just goes the same thing. You can't sit around and wait, right? When things come
No,
up and family events are what they are and life changes, you got to take the punches that go with it, right?
correct.
Now
And
you can
yeah,
turn your current home into an investment property if you have the capital and the reserves, and we talk about that, right? And
of
that'll
course.
keep you into that low interest rate, but that doesn't pull that equity from that home,
Correct.
right?
And that's the trick bag of it, to try to juggle, because that would be the intentions, right? The intentions would be able to maintain the house currently and flip it to a rental, and then go ahead and buy a new one, and then and really expand the portfolio. So that's the mindset, and so the price points, when you start saying, okay, well, how much is our the mortgage payment going to be? Okay, and I'm doing the math for myself,
Right.
versus doing it for someone else, and it's like, geez,
That's
okay.
$1,100 more a month. I got to move, right? Well, I'm going to get $400 in rent roll from
Correct.
the other place, or I'm going
Correct.
to get $500 in rent there.
Correct.
So maybe it makes sense to turn that into a rental, and I'm really only paying $500 more a month in the grand scheme
Yeah.
of things, right? Or
Yeah.
do I pull that equity out and dump it all back into the next one, and I have a $500 increase, but I'm away from that property. I'm not a landlord. I don't have the extra expense. And when you want to be a first-time landlord, there's nothing wrong with it. Just make sure you have reserves.
Yeah, the thing I loved about just the exercise, right? Because we don't know what's going to happen. We put the bid in, and we'll see how it plays out. But the thing I loved about the exercise was that it was it was just like credence of everything that I say on these talks, right? On these stream calls, like I'm living it. I'm
Yeah.
backing it up. I'm not just giving you lip service here. There was a part of me wanted to just sit still. Hey, this is not the right, it's not the perfect time. I need a couple more months. Let me save some more money, or let me get through the winter months. These are a little bit slower. All that, went to the wayside. I was like, no, if this is the move, we got to make the move now. If this makes sense, based on what we're looking to do, we got to make the move now. So it was an interesting just exercise, to say the least, of just, actually living it and doing
Yeah.
it.
Dante's getting into the buy now, sell later program pretty soon.
No, I mean, it's sometimes, and this goes for all loan officers, right? We have clients that we're working with, and we're a little envious. I mean, we have the privilege of being with a lot of different people, whether investors, first time home buyers, and you get to like take a peek financially into their lives, and you see what
True.
they're doing.
Right.
And some of them, like, man, you are in a great. Sometimes people don't even realize how great of a situation they're in. They have like no clue, right? They're so tunnel vision onto what they see, and just with all of our products, all the things you can do, I'm like, oh my god, I wish I wish I was in that position.
Yep.
This is what I would do. And so and so it's motivating. It's motivating that you can do it on a personal level as well.
With you on that one. Let's continue on. You got your outline, so
Yeah, I
let's hit it.
did. I mean, I was waving the white flag about the 0.25. They did come out and say economists have a 90% chance of the quarter point rate cut.
Yeah, I
Now,
didn't want to throw up the statistical numbers. I was waiting for you.
it hurt.
I got to win on that one, right? I hit the 3-pointer on that shot attempt, and I said it's happening, right? So
Yeah. Yeah.
it's happening, right? The market says it's going to happen on Wednesday.
Yeah. And I mean, obviously, for all consumers out there, this is the federal funds rate that we're talking about. I always feel like we have to say this. The federal funds rate is based for HELOCs, car loans, student loans, credit cards. Those rates will come down. Okay. And that'll be effective probably December 8th, 8th and 9th, right? Because today's the
Yeah. Well, I mean, the news comes out
tomorrow. No, the 10th.
today's the 8th. The announcement's the 10th.
Yeah, the announcement will be the 10th. So you'll see rates, unless something crazy happens and unless I turn right, but 90% chance we're going to see a rate cut. That's already been kind of baked into the interest rates. Okay. So, as far as mortgage rates are concerned, we've already kind of anticipated this is the move that's going to make. And so we've already kind of seen the market move last week. So not this week, but last week. Actually, today when we started, rates are a little bit worse today than they were on Friday. So we're already on to new information. You know, obviously, if something were to change or not happen on Wednesday, that would be a huge detriment, and you would see rates continue to go further up.
Yeah, to throw one thing on that, the inflation target will be the next topic of conversation for the next 6 months. Obviously, Powell's been very keen on the 2% number for inflation.
Yes.
And that needs to be the next Fed person is going to start the tone of maybe that needs to be closer to 2.5.
Correct.
Maybe we need to start talking about that as 3.
Correct.
And that's going to be the new talk, because the rate, Powell's going to be more, I'm not really going to get into the rate because I know the cuts are coming. If it's not going to be me, they're coming anyways, right? The pressure of the market's going to continue to have the cuts.
I mean, what they did say and come out and say, and we'll see if we get more information on Wednesday about this, is how that they will give us some guidance and some foreshadowing of who will be taking over the federal chair position, which we really never have had that, you know, as of late. We had to wait, drum roll all the way till.
True.
So this will be interesting to see, if it's Scott Bessent or whomever. Yeah. It would be interesting to see, like, okay, how is the market going to play knowing who's coming aboard and who's going to take the lead?
To me, it's political in that sense. I really would hope that we keep the government out of the Fed. I will always stand by that. That's not going to happen. It is what it is. But talking about it 6 months ahead of time is really just cutting Powell's legs out.
Yes. Yeah. Minimizing, he has not, he's not kneeled to the power. And so I think that is 100% what they're doing is, let's karate chop this guy. His word is meaningless. This is the new person that we need to take issue and umbrage and information from and move forward. So that will be an interesting thing. We really haven't seen that before, but they said we should have that information before Christmas, which would be fascinating to see if we get some this week.
Yeah, we'll see where that one goes.
Yeah. Now, obviously, consumers, it said consumer mindset, what's about to happen. Obviously, we've been promoting this, and this is, once again, a little bit of my exercise that I did yesterday is, the best time sometimes to buy a home is in the winter. Even though there's 30 to 40% reduction in buyers, the pool of buyers obviously shrinks, especially in the Midwest, right? It's just colder outside. What is it today? 24 degrees, and that's a balmy day.
That's right, buddy. You're out there shoveling snow, walking a property, walking out in the snow that probably wasn't shoveled at the house you were looking at. But
100% right.
Yeah.
And I mean, and what's the beauty of it, right? If you're looking at a house in the wintertime, what's the beauty of it? Well, I can see if there's any leaks, right? I can see it, is there any ceiling roof leaks or concerns? I can.
You can, but you can't walk the roof and actually see what the shingles look like, right? And
that's the only thing.
That's another problem, right?
Yes. Yeah, there are some stuff. My grandmother, I was trying to get the poem because it would fit well, but I couldn't find it. But my grandmother was like, she was an author, and she was like a poem writer, very in the arts and crafts and stuff like that. And she wrote a poem about snow and how snow is so beautiful and it glistens, but it covers the ugliness of cities, and it covers things that really you don't want people to see, the ugly sores. And it really speaks when you think about housing.
Yeah.
You can't see that.
It's all nice and flaky, crystal clear, and then white until the slush comes, baby. Until the slush comes.
Yeah, you see some dirty snow, and it's not nice.
It's like you clean your parking spot in front of your house, you get all the snow off, you ice it, and here comes the plow. Just pushes that snow right back on what you just cleaned. No stopping, no nothing, no going around, just moving the snow around.
What's up with those plowmen, man? I mean, they literally direct it right into the cars. If you're parked on the side, we came out of the house and it's just literally like, dude, are you trying to, it's like you have to literally have a shovel with you. It's crazy.
Or you get an SUV and you just go over it.
I guess. I mean, maybe if I was in Colorado, I would think like that, but my goodness. My goodness. What else is going on? So I wrote, I actually had something extra that I thought was interesting. And this actually was news that came out today. They talked about DR Horton and D3 Mortgage got hit with a new RICO suit. Did you see that?
I didn't see anything about them, but I mean, obviously, there's the RICO suit with Zillow and their Flex program as well, right? I mean, and this consolidation of servicing companies, lenders, and brokerage firms for realtors, this consolidation is bringing some of this to the forefront. I mean, I sat here and had to do all my education. I did some education on Friday and different things. And for those in the industry, you're just wasting time of talking about topics. But these are really truly the topics that we're gonna face in the next coming years, from an origination standpoint, from being a broker or what we will call self-employed or running your own personal business. These changes are making a lot of difference in the marketplace. And builders, and I don't know much about the article, but I'm assuming we're getting into the builder offering credit and different price points and things of that nature.
Yeah, let me read it to you. It said borrowers filed a Nevada class action accusing DR Horton and DHI, excuse me, not D3, DHI Mortgage of using a racketeering scheme to suppress property tax escrow estimates, making monthly payments look artificially low at closing. A similar case was filed earlier in Florida. The suit claims DHI based escrow on unimproved land tax assessments, while the true higher amounts were buried in loan documents. When a new servicer recalculated escrow months later, borrowers saw sudden payment spikes and back pay demands. Plaintiffs argued the practice misled FHA and conventional borrowers, qualified buyers for homes they couldn't afford, and let DR Horton market lower monthly payments. Some borrowers report increases of several $100s to over $1,000 per month. And that triggered me this morning when I saw that article, obviously in Nevada and Florida, because we come across that so much, right? We compete with new construction. Obviously we're great for existing homes. We are 100% built and based to prepare you guys and help anyone buy an existing home. But then you get into this world of new construction where it's like the lenders nowadays, because of time has developed, we purposely protect you from this. We don't go off the, just the land. We actually go off the potential house.
And that's the thing, right? I mean, a rule of thumb for us on new construction, when the client says, hey, what are my taxes going to be, right? I mean, because it's not the actual amount. And in this case, they're using the dollar amount as a lower amount to make the payment look more attractive, knowing that when the house gets sold and they close and it goes to a servicing company, those taxes are going to change. In the broker world here, we're either forced to prove what a millage rate looks like and do the calculations, or use a default factor of 1.5% of the purchase price. And a lot of the times that'll show a difference in payment, but that's giving you more of a realistic number, where the builder's just using the number of what the taxes are assessed, because they're also the lender and they have all these different arms. And this commingling of all the different services within the mortgage platform is what's causing these racketeering charges or these lawsuits.
Yeah, very well said. And I just, I've been in several of these battles where, the customer, is referred to me and I do really good work for them and they like everything, but they're like, Dante, how come your payment is, $400, $500 higher than the other person, but you're offering me a lower rate? And it's like, well, it's got to be the escrow. If I'm offering you a lower rate, then you should have a lower payment if we're comparing apples to apples. Right. But if we're comparing apples to oranges, the reality is the escrow. What are they putting in your escrow account? How much are they assessing what your insurance is? Some people don't know that up front, but then they, find out what their insurance is. And what are your taxes? And so many of the new construction competitors that, that I've gone to battle with, slim to none if they put any money into escrow. And that's just a shame. And it leads to this. And I've seen the backlash. I've seen the person, after a year goes by and they're like, hey, my payments just went up $800. Can you help me? And it's like, well, your payments only went up because of your, lack of escrowing your taxes.
Correct. Right. And no disrespect to any of the builders out there in the country. I mean, there's for one of the first time, buying a new home is cheaper than buying a used home, right? So that is out there, right? There's a reason for that. They want to move these properties. So they make incentives available that may only be available through their partners. And if you can't get that same incentive, if you're allowed to take and shop for financing, you're not getting the right deal. They make it look attractive to these closing cost credits, and they give you $15,000 of it, but you may not be able to use more than $7,000 of it. And in the end, you're back to where it could have been, and you could have used the other person that you were talking to. So if you can't get the same incentive while not using their financing company, you're overpaying in the grand scheme of things. And I'm saying that because it's easy for me to say that because we see it, but if I offer you 10 grand and you use my lender, but if I'm not allowed to use but I don't want to use your lender, I'm losing the 10 grand. You're not getting the best deal, is what I was trying to say.
No, I agree. And that should be something I feel like should be taken away anyway. I mean, from a regulation standpoint, there should be no way that you're incentivized. You can, if you go with this company, it's this, but if you go with your own company, it's that.
This. Right?
Yeah, that's crazy.
Well, that's never going to come about because big lenders are still feeding pocketbooks of politicians and everything else, right? So the lobbying is what it is, right? We got a real small lobby for us independent mortgage brokers, right? The realtors on this call, you guys got a better lobby than we do. Although you may not be happy with NAR and all the settlements, you guys still have an overall bigger lobby than us.
There's no doubt about that. Let's do housekeeping notes. This episode today is sponsored by Epic Mortgage. Whether you're buying, refinancing, or investing, call Epic today. That's 708-905-5300. That's 708-905-5300. It's your dreams, your goals. Let's plan together. Now, after the show is over, once you have an opportunity, hopefully, if you like the show, first and foremost, make sure you give it a thumbs up. Appreciate you for listening. Make sure you subscribe to the channel. But we want all the LinkedIn folks, all the Facebook folks, we want you to go to our YouTube channel, Epic Spotlight. And I want you to check out the latest Epic Spotlight podcast. And that was with Latasha Sanders. Latasha is an author, entrepreneur, union business agent, and a community champion. She shares her powerful journey from the back of a garbage truck in Chicago to uplifting others through her best-selling children's book, Miracle Mommy on the Big Blue Truck. It's a great children's book that she created. Discover how Latasha turned adversity into empowerment, embraced her purpose through faith, broke gender barriers, and is now making a difference for women and youth with practical wisdom and spiritual insight. Hear behind-the-scenes stories, advice for young people starting out, and exciting news about her upcoming projects. So make sure you check out Latasha Sanders, the most recent Epic Spotlight podcast. And then we do have some preferred listings. Preferred listings are always on my website, www.danteroyster.com. www.danteroyster.com. I'll put that in the chat just in case. It's been a little thing I've been doing as of late, so everyone can go there. If you want to see pictures of these homes, that's a great opportunity for you. A couple just to bring to your awareness, there's 5533 South Menard in Chicago, Illinois. It's a 3-bed, 2-bath, going for $369,980. Contact Sebastian Kupiec at 773-430-8988. There is a 8153 South Champlain, Chicago, Illinois. It's a 4-bed, 3-bath home going for $399,999. Contact Jennifer Simmons, 773-494-9476. And then we still have one more out there with 12673 Simbay Court in Jacksonville, Florida. It's a 4-bed, 3-bath home going for $375,000, single family. Contact Charday Nix, 904-520-8041. But all the other listings are available on the website, so make sure you check it out when you get a second.
It's pretty funny. I was going to jump in and say, hey, what's going on in Jacksonville? And sure enough, you shot the Jacksonville one off because at one point you were rambling 3 Jacksonville addresses off for that one. So,
Yeah, people are still buying, man. I guess everyone wants to be a Jag fan. They're in first place now, 9-4.
Yeah, the whole thing of no property taxes. That's the new thing in Florida, right? I was joking around with my buddy. I'm like,
Yes.
you can't get rid of property taxes, then you're going to lose all your school systems and your parks. And I mean, granted, we could say that in Illinois, we're one of the highest tax states in the country, but there is a purpose for taxes.
I would love, we've had Nancy King on several times as far as talking about just Cook County in general, but it is, I mean, just some of the sludge, some of just the rabbit hole that you go down of where this money is allocated. It's just unbelievable. But I am always curious nowadays, especially just being in sales, value propositions. What is the value? What am I missing here that I get here and I don't get in Florida, right? What is the value I receive here, but not in Indiana? I'm always curious about that because I feel like if everyone's honest, there's probably a little bit of like, we're wasteful. We're wasteful on the money, and where's the money being allocated?
Well, sure. I mean, and not to side topic our show, their pension liability has a big thing to deal with the taxes, right? Florida doesn't have that same kind of pension liabilities that we do. They don't have the same school systems as we have set up.
Sure.
So there's a little bit of that, right? And obviously we don't get the revenue of the parks that they have in Disney and Orlando, right? So I mean,
Right.
there's trade-offs everywhere. There's waste everywhere. It's just part of what it is. Unfortunately, we're starting to see some of the commercial buildings start to take a turn, and that's really part of the problem. The vacancy rates and the commercial stuff, but we don't do too much of that commercial.
Not too much. All right. Our first question today is, do you think a quarter point rate cut will actually change buyer urgency?
At this point in time of the year, being the winter here, the push isn't really going to be there because you can have the quarter cut, but at the end of the day, that's a $30 difference in savings. That's not the reason to buy the house.
Yeah, I think what's going to create the urgency? I mean, let's go deeper on that question. What would create buyer urgency, you think? What's going to get people to really move? I mean, is it just the lower rate? Is it, you were talking about 6.25 to 6.5. So
Right.
if the rates move to 5.5, do you think that's the one where we're like calling our mom and dad, like, it's time to go, like, let's move?
I think if we got to the 5.5, we're going to see more of the refi business than we'll see the purchase business. And the reason being is everyone's in debt. And that's just what it is. That's just what it is. It's a tough market because you're not going to get the seller to have an urgency to sell their home because they're always going to compare the rate they have versus the rate that they're going to get.
Got it.
There's always going to be an imbalance of that because it's not going to ever be the same.
Sure.
I know. Don't say ever, Vince, but never know what will happen. But statistically, that shouldn't happen again.
Got it. Yeah, that's a good point. I obviously from our business, and when we're looking at the various avatars that we work with, refinancing would be a huge help and a boost in our direction. But the purchase market, what's really going to get the buyers to create some urgency? I don't know. I think, I mean, only that's why I was more into birth rates than anything. I was big into birth rates, thinking about millennials and Gen Zs being the, first and second largest populations. I thought that was the move to make. And it makes more sense that they'll just naturally move on its own accord. But I don't know if there's anything else that can really trigger it, to move faster.
I want to jump one other thing. The other thing, too, is from a real estate standpoint as an agent, you need to start, and maybe we'll talk. I joked with Dante talking about this yesterday, but we got enough questions that we don't need to, and maybe we'll do it on a different episode. You have to start really seriously looking at bridge loan options for your seller. We really have to. One, it creates an urgency of using the bridge, makes it easier for them to be competitive on the house that they're looking to buy with their offer in terms of the financing and getting things moving. And then it also creates the point of, I got to sell the other house anyways. So, and we can get into that in a later time in another show, but really that's really a strategy that you can use going into 26. As we joke around, buy now, sell later, buy the one property, sell the other one, refi the one when the thing goes down. That's what the bridge loan's for.
Nice. How fast do you expect the market to react if the Fed confirms the cut?
It's already priced in, to my opinion.
Yeah.
The reaction's already there.
Yeah.
If we get a surprise, it won't be positive.
Correct. It's going to be a negative if I actually end up being right, but doubtful at this stage.
I'll be waving the white flag. Stop the pain. Stop the pain.
Joe writes, how much impact can a small rate cut really have on affordability?
Well, I mean, we kind of said it earlier in the show. It's a $50, $60 difference a month in the payment, right? And
Yep.
you're not buying a house because of the rate. You're buying the house because of the need. Affordability is a very big deal here. That's part of the problem. But, you also have the appreciation that those that own the home gain that money. So, affordability is only a problem to those trying to get into the market.
Yeah. What's the biggest mistake people make after a Fed announcement?
They expect the rates to go down instantaneously.
They call the loan officer and say, "Hey, I heard the rates went down."
Yep.
I mean, how many times have you heard that? I mean, oh yeah, I heard the rates just got.
Hey Bob,
down,
remember
right?
3 weeks ago I told you that this could happen, and we locked in your rate for that specific reason because you didn't want to have the risk of having a higher rate? Sorry, I can't go back and change time.
Yeah, it's just one of those things. I feel like it's one thing about just overall in general, and this is more of a tangent, but one of the things is like we just being in the industry, it's like an echo chamber, right? You and I are talking, bouncing it back and forth. Like these are just things I know, and just our community knows. But it is fascinating when you go outside of mortgage world and you just talk to the normal person, and they really don't know. They're obviously A, they're not listening to this show. B, they're not watching the rerun of the show on YouTube, and C, they just have no clue.
That's why they got to buy the book this holiday season, The Ultimate Mortgage Guide.
There you go. The Ultimate Mortgage Guide is available on Amazon. It won't solve the equation. Hey, even my ego won't allow you to think that book will solve the equation, but it will give you some insight on just what's available out there in the marketplace. It'll give you some real life scenarios that actually did occur and conversations that did happen. But other than that, though, it's still fascinating that when you just leave the world, the mortgage world, and I go into the common person, it's just how much they just don't have a clue.
Yeah.
It's crazy.
Like when we first got into the industry, what's an LTV, a DTI, back end ratio, front? What? It's a whole different language, right? What?
It is. Bridge loan. What's a bridge loan? How realistic is it for rates to stabilize in early 2026?
Well, I mean, we have a stable rate market currently. We just don't like the rates.
Correct.
Yeah.
And I think there's an issue with that, and you kind of alluded to that a little bit. I think the bigger issue is just income. We've always talked about how income has not kept up with inflation, and with companies, potentially downsizing. And I don't know if you've noticed this, but it is a fascination that I've started paying attention to what you hear. A lot of people are trying to echo the sentiment that, oh, don't worry about AI. It's not going to take your job. It's not going to take your job, right? They don't want this mass panic, in the community, right? They don't want this mass panic of AI is going to take your job. And they're like kind of patting you on the back like, oh, AI is not going to take your job. It's just only here to enhance, make it more efficient. And it's like more efficient is removing you.
Yes, there's no getting around it, right? I mean, these things are going to change, just like how work from home changed, right? Things evolve over time, right? Correct. Yeah, the pandemic pushed a lot of that forward, and that's 4 years ago now, right? That's in the past, but this is true. I mean, it's replacing us.
Correct.
You can go to AI and ask all the mortgage questions you want. It'll give an answer. And more than likely, most of them are right? We're here for the knowledge, which will be the tricky situations or the hard loans, right? Or the self-employed, the bank statements, the alternative product. AI is not going away. It is going to take away some jobs. It's going to obviously It's going to be entry level first. As it progresses, it'll be more. I read a couple books in college.
Strategy.
One of them was, a couple books in college. One of them was called The End of Work, right? And in this book, it talked about the banking system collapsing, and truly it did.
Wow. It was forecasting?
Yeah, I believe and I remember the book. It's called The End of Work. I think it was Edward Griffin, I believe it was the author. So only one of the only books I actually enjoyed reading in school.
The down of the world, but it is interesting. I just feel like, we're seeing it with underwriters, right? If AI becomes good enough where they're going to underwrite files that are AUS approved, you're gonna limit the intake of how many underwriters I'm going to have on staff.
Yeah, but the AUS was AI at the end
of the day,
right?
It was.
It's AI, right?
Yes.
Granted, the AUS system came from Countrywide years and years and years ago called Clout, but at the end of the day, it's AI, right? It's the same thing.
Correct.
Pretty soon, we'll just have the consumer being able to put the information in the AUS instead of it being us.
It's what was I always mess it up. What's the tax thing that people can do their own taxes? TurboTax, right?
Oh, yeah.
So, so TurboTax is like a great example to me of, why do people still go to CPAs? CPAs are still in business today, even though you could probably virtually do it yourself, right? Landscapers is another example. You can cut your own grass, but you still have a landscaper. I was talking to a friend of mine yesterday, and he was like, man, I got a landscaper, and so do I. But he's like, I said, why do you have a landscaper? Because he actually was shoveling his own snow. And he's like, I love the workout. And I said, oh, okay. And I said, well, do you cut your own grass? And he's like, no, I got a landscaper. And I said, why do you have one? He's like, I just love what he does. And then I'm busier in the summertime than I am in the wintertime. Mm-hmm. And all these things, his factors, that the reason why. And so my point is, you can do it yourself, and the tools will be present for you to do it yourself eventually. But sometimes you want the expertise of somebody else, someone you want double checking your work or make sure there's no mistakes, that it gets done. You don't want to be the reason why you screwed up, for your family.
Yeah. I tried to use the edger, and I unfortunately cut out half the grass, so we don't need to worry about mowing it anymore. Right. Or whatever. At the end of the day, you pay for a service, and, I still deal with an accountant, even though I could do my own taxes. I like someone else doing it. It gives me another person to go to. And it's just one of those things.
Could you imagine you're renting an apartment and you give your landlord a 30-day notice because you can do it yourself mortgage, and then you messed up on the DTI and you don't qualify now? And now, your family's potentially homeless because because the landlord's like, well, I already just rented out your space. I need you out.
Yeah, you gave me the notice. You said you were going to be closed. Well, yeah, but I didn't tell you that I made a mistake.
Correct. It happened to one of the clients. I remember this. It was a crazy story, but lady was trying to do a dual situation, right? She was trying to sell her house and buy a new house, and she was going with another lender, and so she was all set to do the multi-closing on the same day, and lo and behold, and this kind of goes to your bridge loan point, she sold her house in the morning, but the lender couldn't close the deal in the afternoon. He thought he was going to get it clear to close. Something popped up and there was no clear to close. And she had sold her house. So literally she was homeless, and folks, these are not like ha 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 jokes. This is real life.
These are true horror stories, right?
Yeah,
this is when the loan officer has to say, I'm sorry, the guys sold your house. Something came up and we made a mistake, or I made a mistake. And we're going to have to go back to the drawing board, and you got to go live in a hotel for the next 2 months.
Yes, and that literally happened. She obviously was sick to her stomach, didn't want anything to do with him. I was the second option on this situation, and I came in, and amazingly, I was able to get it done, and we closed it out. But there was a 3-week period that she had to stay at an extended stay, because and so case in point, making it full circle, talking about the bridge loan. This is a product that it seemed like for the longest period of time, I never really understood what it was. But now the power of not having to worry about the sale of your house and the buying of the house, man, it's so important.
And that's the thing. But then bridge loans are not cheap. They're expensive.
Very
They add
expensive.
an additional cost. But then it comes down to, just like Dante said, you pay someone to do your grass, but you won't pay someone to do your snow, right? Because you're busy. The bridge loan is really designed to say, do you want to take some of the stress of buying a home out of the equation?
Correct.
Meaning selling your current, buying a new one, use a bridge loan, find the house you want to go buy, make your offer. You're essentially cash. You buy in, you move into the new house, and you turn around and you sell the old house when everything's settled. So everybody has some form of a bridge loan product. There are variations out there in the marketplace. We have a couple as a broker. We have different lenders. But it's a new way of selling your house. Sometimes you don't even need to sell the current home. You can hold on to the existing house. It's a timeline, right? It may be 6 months. It may be a year. It may give you that opportunity of creating the sense of urgency of, I'm going to sell because I need to sell anyways, whether it's a year from now or 6 months from now. I'm going to start this process and I'm going to use the bridge loan. Another option is using a bridge loan for people that are downsizing. Hey, what do I do with all this stuff? I've lived in this house for 30 years and I'm going to a condo. Well, let's buy the condo, get you into the home, declutter, go through everything. And so there's so many different ways of using the bridge loan in the right way to help you be aggressive in the house you're looking to buy or addressing life that comes up.
Also, too, just the concept of moving, right? I mean, just all, that was one of those moments where I was looking at my house yesterday and just like all the stuff that, has just accumulated over the years that you're like, geez, how long will it take to just, and you don't have to worry about that. So that's the stress when you talk about selling your house is about, making it presentable for a potential buyer, but also, starting to store your stuff because, they always talk about decluttering, right? I mean, that was one of the conversations that we had on the show about decluttering. So bridge loans are very important. I felt I was able to use one this year, which was a great situation. Had a conversation just a couple of weeks ago with a guy. Guy lives in Naperville, close to Naperville, let's just say. Free and clear property. Once he sells is about $350. They're looking to buy about a $1.6 million house, or they wanted to be in that vicinity based on the room space and just where they would need to be. Probably 1.2 to 1.6. And, it's got this free and clear property. He's like, yeah, we want to sell it and buy it, but it's just so much that you have to do. Everything has to be so perfect in the timing.
Right. It's that timing, right? Well, buying and selling a house, let's call it a 60-day period.
Sure.
Right? Find one, move, get into the next one. Let's call it a minimum of 60 days. Okay. For that 60 days, moving and everything that goes with it is the full-time job.
Correct.
Right? You still got to deal with the kids. You still got to deal with your job, and you got to throw this on top of it. These bridge loans products that are out there today allows you to break that up into a two-step process.
Correct. Take your time.
That's what it comes down to.
Yeah. And that's why I told him. I said, and he never heard of it, right? I mean, so bridge loans are one of these products that are like, I really don't really understand this, or I haven't heard of this, and what, so he was inquisitive, very smart engineer, but he had never known. I said, hey, it is expensive. I'm going to tell you up front, it is expensive, but, carrying costs and just all the stress levels, sometimes it's priceless. It's a
convenience factor, right? 100%. I mean, it's a convenience factor, right? And you pay for that. You pay for that reduced stressful transaction.
Correct.
You pay for the security of not having to worry about selling your current home in order to get your offer accepted on the house you're looking to buy, right? Because when you have these bridge loans, you're non-contingent. It's almost buying the house in cash.
Correct. And that's huge, right?
To the seller, that's a huge situation, right? I can close in 3 weeks. What do you want to do?
Yeah, no one wants a contingency buyer. No one wants to have to wait. They know what can potentially happen. So it's almost a reassurance that, hey, we're solid. We're ready to go. So we got a couple more here. Let's go. We'll wrap them up. Ken, do you expect home prices to rise again with increased demand? Yes.
Yeah, that's
Yeah,
the
I think
scary
I
part.
think we're still in a bubble of, prices rising.
Yeah, I mean, that's the part no one wants to talk about. Rates come down enough, you're going to have another increase in pricing, right? So the affordability thing is going to become an issue even more. So I don't want to forecast that. The rates aren't low enough to where that's really an issue yet, but that is a concern.
It's weird. Both you and I kind of started right around the same time frame, and so we were walking into this industry when rates were like 9 or 10%, and then we kind of saw them go down, and we're watching them go up. It will be interesting. And then from a price point, I mean, that was
Yeah.
interest rates.
And hold on, he just did one of these things, right? But that's over 25 years, people. Let's remember that.
Yes, I made it look easy, but no, it's 25 years, so it's a little bit longer. It's more of like a smile. But then from a price point, something that we really haven't talked about on the show, home prices have been, this upward climb. With obviously the big hiccup with the housing bubble, maybe a spike down. They said lowest levels of prices was 2012. Right, that was kind of the bottom of the market. If you look from 2000 to 2025, the bottom of the market was 2012,
Sure.
and so we've seen the spike up. What would bring a spike down? What do you think? What would bring a spike down?
I mean, we talk about it, right? I mean, what was '08? Yeah, people were overextended. Yeah, there were products that should have never been invented or whatever. We can get into all that, right?
Sure.
People lost jobs. Right. And you had two things that hit. You had people losing value in a house that they didn't have equity into it. And they lost their employment. And you had lower credit criteria. No money in. There's no skin in the game. Today there's skin in the game, right? And this is why house values haven't dropped. You can use a second mortgage to borrow more than 80% of your home.
Sure.
But let's just talk first mortgages. If you own a home, you can't leverage to over 80% on a first mortgage.
Correct.
In your existing home. That is a cushion, right? And nothing's real until you actually take the money out of the house, which goes to the point of we talk and joke, take the money out of the walls because now it's real money. So the housing market's inflated. It's inflated with a 20% hedge. So you can't see that type of decrease in pricing. It won't happen because not everyone's going to sell their house at the same time.
Yeah, I mean, we saw some softening earlier this summer, right? Some softening in some areas of pricing, but nothing major. It's been more of a flat line than anything. And now with potential rates to drop next year on the horizon, that would only increase a valuation. I mean, once again, economists already predict a valuation to be somewhere in the vicinity of 2 to 4.5%, appreciation.
Right.
So it's just one of those things that like things are getting more expensive, and that's where you kind of have to jump on the boat. Like, even going back to my example, if I wait 2 years, it's just a higher number.
Yeah, right. It's just a higher number. So you're going to gain, and you'll gain the higher number on the house you're selling, right? So it's just a transfer, essentially, at the end of the day, right?
Correct.
It's a transfer, right? So, and just, Dante knows me for a long time. So on Wednesday's show, I was trying to jump in with little quick comments. And by the time he got to the comments, you guys were already past the subject. But on one of the statements I made, just sell the house and start over, it referenced to the beginning of the conversation with Jess on Wednesday of someone who fell in trouble, right? And they wanted to pay debts off. And that's exactly what it is. You can't wait until those things happen because then it's happening for everybody.
Correct. Yeah. No, I mean, everything has to be proactive nowadays because, even in our business back in the day, we used to be able to help people, in a reactive situation. Hey, you got into trouble. Let me clean you up and put you back out there. But nowadays, I can't do that. I have a customer right now. He was looking to do a refinance of a FHA loan. And it's like, oh, you've had your 2 times 30 in the last 12 months. And based on his credit score, we were looking to do a streamline, couldn't do it just as a regular. So it's like
because of the pay history, right?
Right.
So now you gotta wait the 6 months, you gotta pay the ping on time, and then we can go back and readdress it. But still, that's a small payment savings. It's not enough to really probably
100%.
fix his situation.
Correct. It's a band-aid. It's a short-term solution. But I was like, and to your point, I said, hey man, you got to hold on. I'll come back to you in May, but you got to make all your payments on time, and I'll get you in May, but you got to hold on.
And even when you go back and address that conversation with that client in May, you're still going to tell them this is still a Band-Aid. This still isn't a fix, right?
Correct.
So it's almost like the kid that scraped his knee and then you got to pull the Band-Aid off. It's almost better to just pull that Band-Aid off, get that 6 months, get that seasoning, and do something to change the overall situation.
Correct. I mean, these are financial habit issues.
Sure.
This has not, I mean, I can save you $100 a month, $200 a month, but it's not like I'm going to take a mortgage from $2,700 to $1,500. That's not a reality.
And that's the thing too, right? And we've done this for years past. I mean, and granted, we're in the business now for a longer time period. I used to chase the $100 savings, right? Like, hey, this makes sense. Let's save you $100, right? Because it was a paycheck, right?
Correct.
But now as that we've gotten older and we've gotten more established in this industry, that financially doesn't make sense to redo a mortgage for $100 savings. Now, it makes sense to do it for a term savings or other things, but there's got to be other issues to it. So,
yeah, I think, speaking to you just kind of off cuff, I mean, that's kind of the Barry Habib, mindset of the world, like, establishing bigger strategies and working with clientele that can really benefit from that. I think it's a huge mental transition of, looking who you're working with per se, because, those, you don't believe in them anymore. I mean, basically is what I'm hearing you saying. And I'm with you on it. I will still present it and offer it because, if the clientele needs it, I'm here for you. But sure. Definitely I get it if that's not going to move the needle.
Yeah, but you're not chasing it either.
No.
Right. Like, I mean, I used to market to chase refis, and that's what we were marketing to chase for, right? Like,
right. No, I get it. We got 2 more, and let's just get this wrapped up. What market indicators should we watch right after the announcement? Well, I think it's really on Thursday. We'll get to hear Jerome Powell. Normally he speaks, or we'll get kind of the tidbits of what he says. And
it's
now
Wednesday, isn't it?
Well, Wednesday they announced the cut, but don't they give us the tidbits of what? Oh, he does speak on Wednesday.
Well, no, I mean, he's got a press conference on Wednesday after the fact.
Correct. I'll get the Cliff Note version on Thursday, is what I'm saying.
I'm sorry.
I'm not actually going to listen.
We might not want to listen to what he has to say, but I mean, again, right? I mean, market indicators. You're going into the holiday season. You anticipate a Christmas rally. You're in the last 3 weeks of the year. I mean, the indicators aren't really going to move all of what it is. I mean, everyone's already checked out for the year. Volume's really low and right now in the marketplace.
Correct. And it was just something happened around Thanksgiving, just the government shutdown, Thanksgiving, being at the end of the month. It just, it really, all that good food that everyone ate. I think everyone's kind of just, let's just try to get through this as quickly as we can and as painless as we can. Yep. Especially with the news being, it's all outdated news information. Anyway,
yeah, but the reports aren't reporting right now.
Correct. And the final question, Danny Davis, do you think waiting for a perfect rate is still risky in 2026? Yes.
Yes. Right? I have nothing else to say to that one, right? I mean,
nothing else to say. All right, buddy. No, we did it, man. An hour in the books again. I appreciate you. I was trying to next Tuesday because I think we got Mr. John Andrade going to join us on the 16th.
Yeah, no, I saw your emails. I got to go dentist on Monday, so I may. Hopefully, I'll be okay for Monday next week, and then I'll pop in with John on Tuesday for sure.
Yeah, we got Randall Avery next Monday, and so I will go ahead and leave everyone an update for tomorrow. I think I'm with somebody, but I'm not sure. I just had to check and see.
Dante going solo on a Tuesday.
Might have to go solo dolo on a Tuesday, but we'll have some conversations. We'll talk about the Bears. I'll give a little insight on the Bulls. Yeah. Something like that.
Well, and again, if you're solo on tomorrow, hit me up. I may be able to squeeze it in. I got something at 9, so if you need it, let me know.
All right, I'll take a look. Hey, appreciate everyone for listening. Make sure you give this a thumbs up, subscribe to the channel, and we'll be back tomorrow.
Thanks, everyone. Take care.
Bye.
See you, bud.